As many of you know, Mediclinic International is South Africa's biggest private hospital group by value, and it's controlled by Remgro.
Indeed, 42% held by Remgro. Remember, the main assets are in Switzerland, the Hearslanden Group. Big businesses here, of course, in South Africa, where everyone's familiar with their hospitals under the Mediclinic brand. United Arab Emirates, and now trying to make an entree into the UK market.
Market cap, 93.3 billion rand, PE of 21.5, dividend yield 1.4%. Mediclinic, we are big believers from a hot stock portfolio perspective, but we have taken some pain on the downside given the rights issue. Let's drill down into this one as an opportunity, or whether there is more pain in the pipeline.
Well, we're also big supporters of Mediclinic. I also like the company. I think it's, again, the whole trend that we just discussed around HCA is very applicable when it comes to Mediclinic. And Mediclinic, from a South African stance, have actually diversified so significantly that more than 50% of their earnings are earned offshore. With their new acquisition that they're planning, with the money that they're getting from this rights issue, which is about an 8.3 billion rand rights issue, they're going to buy some of it from Remgro, who currently has that holding. But yeah, they're going to actually diversify into the UK and then be able to earn around 70% of their earnings offshore. So it's a grand hedge against the rand. And this one is probably not going to stop being that. They probably look at new opportunities as they come along abroad. Again, hospital groups are very defensive. They make a lot of money, and going into the future, I don't think this trend will change. It hasn't been taken so well by the market, this rights issue. You know, we saw the price be a little volatile around the news, but not something that I'm extremely worried about for the longer term. I think it'll still be in the benefit of the shareholder that they're expanding.
Well, you are definitely not worried about this one for the longer term.
It's had quite a tricky 6 months. I mean, let's have a look at the 5-year chart, because it'll show that we've had a bit of a mountainous and subsequently hammering sort of a time. Remember the currency volatility we've seen with the Swiss franc. That's confused people and led to some worries about the impact on the debt and also on the profit margins from Hearslanden, the most important division. But the local scene is fine. I mean, it's a bit of a mature market, South Africa, perhaps. There's always the sense that maybe the government's interventions may not be entirely positive, and therefore the group has been expanding internationally. I like very much the idea of the UK add-on. The rights issue is fine. It's good that they need more money to buy.
Your conviction hasn't been that high that you've taken opportunity of any dips.
Yeah, but that's because we've spent all of the money in our hot stocks portfolio. We don't have any more.
In your Vestac portfolio?
Oh yes, no, absolutely. We've been buying Mediclinic all the way through this process, and in fact we've been selling resources and commodities holding in order to free up cash to add to the likes of Mediclinic.
Yeah, you know the same questions coming to you.
Well, we have done exactly the same. So if that's any answer, we think the growth opportunity within Mediclinic from a South African point of view is great. And the more you can be diversified against the rand as a South African investor with your money that's local, the better, because you're going to benefit from it over the longer term. And you know, when it comes to businesses that aren't just a hedge, that are actually invested in profitable sort of sectors abroad, then it's even more profitable for you as an investor. I also think when you just want to compare the investment they're getting into in the UK to that of Netcare's, much greater business that Mediclinic is buying into. So we prefer Mediclinic by far, when you compare that to Netcare. And Netcare has been sort of a turnaround story.
Well, we're going to chat about, we are going to chat about Discovery. We're not chatting about Netcare. Why are we not chatting about Netcare?
Well, again, we probably could, and we could also talk about Life Healthcare, but that's too many for the conversation we have today.
So let's go back to being hot or not.
We are very hot on
very hot. Paul, you are, sir?
Yes, so the deal was that this stake, a third stake in Spire Healthcare in the UK, came up. It was owned by a private equity group. Remgro bought it for them because it had the money in its bank account. Remgro, of course, is the parent company. They've underwritten the rights issue. So that's just a holding process.
42%.
So it will probably stay the same, because everyone's going to go for their rights because they're at 90 Rand. You can get these cheaper shares and you don't have to pay brokerage. That's all good.
Just give me a definitive, hot or not?
Definitely hot on Mediclinic. The current share price level 105, 106 looks good to us. Definitely accumulate.